Welcome to Spotlight on Market Pulse. Of course, with me is the co-host, Frank Fagbo, and we're focusing on the billionaire who's been making headlines, Aliko Dangote. But first, let's dive into the market news that's got everyone talking, oil prices.
Exactly. So oil prices have been $70 per barrel for the first time since 2021. And this is really affecting the Nigerian economy. This would affect the Nigerian economy, and this has significant implication for our economy. With the naira already weakened, it's nearly $1,600 per barrel. This drop in oil prices could literally affect and add even more pressure. And if you look at it, the federal government's benchmark crude oil price in 2024 budget was set at $77 per barrel, 77.96 as a matter of fact. But with production not meeting the set target, this could be a challenging time ahead. What is the way forward for a lot of Nigerians, especially knowing fully well that we are fully an oil economy? But what does this mean for Nigerians? Well, low crude oil prices could result in low petrol prices, which would be a welcome relief for a lot of Nigerians, because if you look at the oil sector, it's now being deregulated, especially as regards petrol. And this would definitely have a ripple effect in the entire value chain of the sector. However, the ongoing dispute between authorities and Dangote is put in the middle. You see Dangote between the authorities and the federal government over petrol pricing. And this thing is only adding to the uncertainty in the sector. And Nigerians are asking the question, what is the way forward? Here are the key highlights that you need to understand. The oil prices fallen below $70 per barrel. And if you look at the price of the naira to the dollar, the naira has further weakened to nearly $1,600 naira per dollar. Dangote's business empire spans across food, shelter, transport. That's what we know him for. But right now, he's come to play in the oil and gas sector. And you see him literally fighting for his $20 billion asset. His company produced spaghetti, sugar, flour, cement, and oil and gas produce. The drop in oil prices could impact Dangote's bottom line. But this is something I need you to understand, as if you're listening to me. If it affects his bottom line, it definitely would affect the Nigerian economy in some way, because we are fully an oil-denominated economy. And with that, seeing what is happening, the oil benchmark, $77 per barrel. Sometime in April, we had the price of oil hovering around the $94 per barrel. But I don't think the Nigerians or the Nigerian government took advantage of it. And right now, that the price of oil is way below our oil benchmark, $77, meaning we have a deficit of $7. And how do we go from here? I think Joanna, what do you think about what has been happening in this sector?
I mean, it's interesting to see what's happening. The dip in oil price of late. Yeah. I mean, it's be interesting to see how that, and if at all it does reflect here, because we know that hasn't been what we've been running with. We've been running with for a long time. Petrol prices have been highly subsidized. It's just, slowly they're trying to take or reduce the amount of, subsidy on petrol price. So whether or not we'll get to the point where prices at pump are reflective somewhat of, crude oil prices priced internationally, especially with this dip, it's something that waits to be determined, right? There's still questions on how crude oil will be priced right now. So, I mean, we're going to have to wait and see. But as you have pointed out, a huge chunk of our revenue here in the country is dependent on oil, right? The money we make from oil. And, if oil prices go down, the questions around liquidity in right now what we're seeing, even though some are saying it's short-term volatility that we're seeing in the market, there are questions around, how that will affect liquidity, which we're trying to build on. We saw what happened with the recent bond. So it'll be interesting to see how this plays out, in the long run. Maybe not. We'll see whether the prices go up ahead, but there are a lot of factors that go into that as well.
I really just think that we didn't take advantage of the time when we had the price of oil, the global price of oil, way beyond our oil benchmark. At the point
the federal government come out earlier.
The price of oil was 94. It got to $94 per barrel. And remember what happened in the Middle East. You're seeing what the chaos between Russia, Ukraine, the chaos between Israel, Gaza. It really affected the price of oil, and it was supposed to be to our benefit. But we didn't take advantage of it.
When it comes to production volume and tackling oil theft,
we're still yet to discover how many barrels we produce. They've been a lot of back and forth. 1.7, 1.5, 1.2. And it's just so many issues.
Yeah, I mean, that definitely could have been a period that we capitalized, on higher oil prices. But, we've missed out several times. Crude oil production remains, an issue here, especially with the crude oil theft and the lack of accountability. So there are so many issues along the value chain, upstream, downstream, here. So our issues with oil, I wouldn't want to say completely separated from what's happening in the international market, but there are a lot of factors that do differentiate what happens here with crude oil from the international markets.
How about we diversify? We've been talking about that. We see what is happening. The agri sector is one sector that we can diversify into, rather than having to dwell in oil. And it's at the same time, it's a curse and a blessing. So sometimes we see it based on the fact that it's our natural resources, but at the same time, we're not able to manage it. And that is the work of the excess crude account. Anytime the price of oil is beyond our oil benchmark, that extra should be kept in the excess crude account. But there's a lot of work to be done. There's a lot of work to be done.
And a lot right now that is affecting the economy, right? And the naira as well. Of course, we'll continue to track all that and more right here on Market Pulse. Thank you very much, Frank, for the insights, and this conversation. Look forward to having you on again tomorrow.
Thank you, John.